European Central Bank cuts but signals the cycle is near an end. US markets were buoyed by a trade call between Presidents Trump and Xi. All eyes are now on payrolls data to gauge the Fed's next move. Australian households remained cautious in April, and New Zealand's construction sector may have found a floor. That's coming up in our 5 Things in 5 Minutes on Friday, June the 6th. And then in our deep dive interview, ANZ economist Vicky Xiao explains how ANZ Research developed a model to provide more timely estimates of China's export performance.
Given the China and the US trade war, China's trade data is really in focus, especially the export performance. So we came up with this model to estimate China's export performance in a more rigorous way.
But first, in 5 and 5 with ANZ. I'm Alex Tarrant, in for Bernard Hickey. The European Central Bank cut its benchmark rate 25 basis points to 2% as expected, but it surprised some by indicating the rate cut cycle was nearing an end. Here's ANZ economist Bansi Madhavani.
The ECB may be leaning towards a pause and see how growth and trade risks sort of unfold in coming months. What we think that means for future policy path, we think the ECB has room to cut rate one more time, but that may not be at its next meeting. We think it's possible that the ECB may keep rates unchanged at its July meeting before cutting later in the third quarter.
The euro gained. At 4 a.m. Sydney-Melbourne time, it was up 0.2% against the US dollar. Elsewhere, the S&P 500 was flat. The 10-year US Treasury yield was up 3.5 basis points at 4.398%. Gold was down 0.7% at $3,376 US dollars an ounce, while West Texas Intermediate futures were up 0.86% at 63.40 US dollars a barrel. The US dollar index was slightly weaker, with the Aussie up 0.32% at 65.16 US cents, and the Kiwi up 0.28% at 60.45 US cents. The S&P 500 had been higher through the session following detail of a long call between Presidents Trump and Xi discussing US-China trade. Here's Bansi again.
In terms of details, we didn't get a lot, but at least the direction of his post suggested that positive news can be expected. Now, the equities market reacted positively to the news, but foreign exchange and bond markets were somewhat less enthusiastic. It seems that there is still apprehension about how these talks could progress, and there are fears that things can get derailed at some stage.
Number 2. In the US, attention now turns to the non-farm payroll report for May. ANZ international economist Tom Kenny expects 120,000 jobs added in the month. That's close to consensus, but down from the 177,000 in April. Tom says it would still show a resilient enough jobs market for the Fed to hold rates in coming months.
You have to have a pretty substantial downside surprise to change the narrative for the Fed. So quite a low employment number, maybe even negative, and a bit of a lift in the unemployment rate by, say, a couple of ticks, so from 4.2 up to 4.4, 4.5. I think that might get the Fed a little bit nervous on the state of the labour market, but I don't necessarily see a shift from the Fed right away. Probably have to take a couple of months of pretty weak employment data to sort of shake them from their view.
Number 3. Australian household spending rose 0.1% in April, below the market expectation as spending on goods fell. ANZ economist Aaron Luke says consumers are likely being cautious as opposed to constrained.
From the national accounts data, we know that gross disposable income has been improving. We know that household savings ratio has gone up to 5.2%, so that's pretty good. At the same time, inflation is back within the target band, so we know that real disposable income per capita has been improving as well.
Number 4. Australia's monthly trade surplus fell $1.5 billion to $5.4 billion in April, as goods exports fell 2.4% and imports rose 1.1%. Here's ANZ senior economist Adelaide Timbrell.
That drop in exports did include concentration of a drop in US exports, although this is not necessarily a strong tariff impact. In fact, when we look across the broad categories of exports, most are similar or stronger than they were in February. What was special about March is that there was a spike in non-monetary gold exports, particularly to the US, which seems to have reverted in the monthly data.
Number 5. A key component of New Zealand's Q1 GDP, building work put in place, was flat during the quarter against expectations of a slight fall. ANZ economist Matthew Galt says the construction sector may have found a floor after a large fall from its peak in 2022.
We'd probably describe this more as a stabilisation than a particularly decisive turning point. We had been expecting to see activity in the construction sector stabilise, consistent with what's been happening with residential building consents and the construction questions in our ANZ Business Outlook survey. But we'd need to see stronger data than this to really call a decisive turning point upwards.
Matthew Galt there. Now, for our deep dive interview, I spoke to ANZ economist Vicky Xiao about a new model ANZ Research has developed to forecast Chinese export performance.
Given the China and the US trade war, China's trade data is really in focus, especially the export performance. So we came up with this model to estimate China's export performance in a more rigorous way. And in general, the first economic data from China is a PMI number. Inside the PMI, there's a sub-index called the new export order. So normally this will provide us the earliest information to gauge export performance. And then there's a weak gap between China's PMI and China's trade data. So during this interval, the data from other Asian countries could be informative. So this model is really using the other Asian trade data to give more information about China trade performance. So we gauged data from other Asia countries, such as South Korea, and economies like Taiwan, and also PMIs from the rest of the region. And we found that Taiwan export order and South Korea and then Vietnam trade data are the best predictor for China trade.
And so I guess that's using their input data. Is it just good looking at those Asian economies in terms of predicting China trade, or is there a way of looking more broadly?
So the official data could be more accurate, but it couldn't provide high frequency shift in trade these days. So we are also looking at the port and the shipment data to provide more real-time shift in trade dynamics. However, we need to be mindful when using this volume-based index to forecast export growth in dollar term, given the price deflation in China.
And so what is the model showing at the moment in terms of how Chinese exports might look?
The most recent estimation based on the model predict in May, China's export growth will be at 5%, which is slower than 8.1% growth in April. And this prediction is also largely aligned with the official data from the Transport Department in China, saying that the cargo shipment in China increased by 5% in May.
Just more generally, I guess, outside of the model, where do you see China exports heading over the next few months as this global trade war continues and we have the tit-for-tat announcements, say, between China and the US?
Yeah, looking at the big picture, we still have the 90 days ceasefire between China and the US from the middle of the May, and then this will last until the August of May. Next month, we will continue seeing the front-loading activities, and the exporter in China will use this 90 days window to push out as much as export and they could. So we will continue seeing this momentum continuing until the next trade agreement being reached between two countries.
Vicky Xiao there. I'm Alex Tarrant in for Bernard Hickey. That was 5 and 5 with ANZ for Friday, June the 6th. Catch you next on Tuesday, June the 10th, following Australia's public holiday on Monday.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.